Yes, sir.
Ajay, not able to hear you.
Hello, can you hear me now?
Yeah, now is okay. Now is okay.
Yes, sir. Yes, sir.
Yeah.
Can you see me?
Yes. Both
Good,
audio
good.
and video is clear.
I can't
I'm
see.
able to.
Rao, sir, I have been reading your articles, sir, in the very relevant articles. Really good. Thank you for sharing also.
Thank you. Yeah. And Mr. Sony is on mute. Yeah.
Sir?
Shall we start, sir?
Yeah, we can start.
Yes,
Okay.
yes.
Rema, I think we can start, Rema.
Yes, sir.
Sony is on mute.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. Good evening, everyone. I would like to welcome all the participants to the fourth webinar of the series Banking Matters on the topic Bank Fintech Collaboration Opportunities and Challenges, hosted jointly by Southern Indian Bank staff.
Soundless ಆಗಲಿಲ್ಲ sound ಬೇಕು.
Hello.
Yeah, you can mute all so that there are no disturbances.
Rema, we can hear you, Rema.
By Southern Indian Staff Training Colleges and VRDDHI Consultancy and Training Services. Yes, sir. Sir, are you able to hear me?
Yes, Rama, you're audible.
I would like to take an opportunity to invite Mr. Ajay K. Anath, Managing Partner, VRDDHI Consultancies, Training Services. Welcome the participants. Over to you, sir.
Can you hear me now?
Yes, sir.
See, glad to welcome you all to the fourth webinar of Banking Matters. Though there's a cricket match going on today where India is playing, we have more than 32 participants already have joined this webinar. Today we'll be discussing on one of the most relevant and important topic, Bank Fintech Collaboration, Opportunities and Challenges. I am not going to elaborate on the topic as we have Mr. KLSN Rao, Principal SIBSTC, to make the theme presentation. And we have two very eminent keynote speakers representing the banking sector and the fintech segment to address the participants. It was once discussed that the giants, that is banks and NBFCs, are under threat from the nimble fintech startups, an industry which is now expected to grow at $150 billion in 2025. Now, we are witnessing a period when the banks that sit on a huge gold mine, that is data and customer base, and huge spread of physical presence throughout India. And we are also seeing the fintechs with their technology and innovative capabilities collaborating and coexisting to provide better customer services and draw a new chapter in Indian banking system. And it is likely to change the total Indian financial landscape. Let me now welcome Mr. KLSN Rao, Principal, Southern India Bank Staff Training College, and the brain behind this initiative. Let me thank you for giving us the opportunity to associate with the prestigious institution which is celebrating its golden jubilee. Congratulations to you, sir, and your entire committed SIBSTC team for the glorious 50 years of journey with dedication and contributing immensely to the Indian banking system. Welcome to you, sir.
Thank you, sir. Thank you, and good evening to all of you. In fact, the webinar session was conceived that we need to educate the banking fraternity and also all those who are interested to know about banking. Therefore, me and Mr. Ajay, and we thought, why not we collaborate to provide the inputs? So we had already 3 sessions. All the 3 were exceedingly great and exceedingly acceptable to the banking fraternity. It was related to the banking system. Now, in the last webinar which we had, at that point in time, our governing board chairman, Sri Mahabaleshwara MS, who is incidentally also the chairman of our college plus the MD and CEO of Karnataka Bank, he suggested, going forward, or rather now, with the digital revolution happening in the financial system, more particularly in the banking system, why not we have a session next month, the webinar session on the role of fintech companies, the necessity for the banking system to enter into collaboration with the fintech companies. Let this be an awareness among the banking fraternity. So it was decided at that point in time to hold the session on the fintech, the relationship between the fintech and the banking system, and the need for the banking system to collaborate. So that is how this week's webinar topic is conceived. But let me at this juncture inform you, the banking system, particularly in the 21st century, we are into the 3rd decade. We have seen the first decade between 2000 to 2010, the banking system focused on implementing core banking solution. That means from the manual system, we shifted to the CBS system. The entire decade, the first decade of the current century, was dedicated to converting the manual to CBS. And the second decade, between 2011 to 20, was predominantly occupied by finding alternative delivery channels. It could be internet mobile banking system, RTGS, NEFT, and so on and so forth. So it was more of fine-tuning the delivery system, and that is how it was done in the second decade. And in the third decade, between 2021 to this 2030, what we are seeing is a digital revolution. In fact, in our training programs also, we always mention about the fintech companies. In simple terms, we know fintech, what are fintech companies? Simply means technology companies providing platform for transfer of financial transaction or enabling the financial transaction to be done smoothly. And we all know India is the birthplace for the fintech companies. And in fact, yesterday in our Golden Jubilee celebration function, when Sri M. Rajeshwar Rao, Deputy Governor, Reserve Bank of India, in his keynote address, also he mentioned Bangalore is incidentally the capital of fintech companies in our country as well, fintech capital of India. So therefore, now the fintech companies holds the key. In fact, earlier, generally it used to be said that the strength of a person is the power in a person. Then subsequently, this was replaced by money was equal to power. Initially, strength was the power of a person, replaced by money was equal to the power. Now, as Mr. Ajayan mentioned, data is most powerful now. Now, these fintech companies with huge database, they are virtually driving the financial system in our country, and therefore this webinar session will be of great use to the bankers as to how they need to have a kind of relationship with them and also collaboration, how it can ensure a win-win situation both for the banking system as also for the fintech companies. So this is how it is conceived. And when I went to South Indian Bank to meet the MD CEO plus the Sri Thomas Joseph, they have immediately, in fact, Thomas Joseph immediately suggested the name of Mr. Soni. He is the best person in this. So therefore, we have with us the best person in the field to talk on the fintech company, the relationship, etc. And I'm not a technical person. I leave it to them. Thanks. Thank you, Mr. Ajayan. Thank you, Mr. Soni. And also thank Madam Dina for her involvement in this. And thank you very much. And wish all of us have a wonderful session. Thank you.
Thank you very much, sir. Let me take this opportunity to welcome the keynote speaker, Mr. A. Soni, General Manager, Head of Digital and Technology, South Indian Bank. Welcome to you, Soni, sir. Let me also welcome CA Dina Jacob, co-founder and the vibrant award-winning CFO of Open Financial Technologies Private Limited, India's 100th unicorn startup in India, and the first unicorn from the state of Kerala. Unicorn, as you know, perhaps know, refers to any startup that reaches the valuation of $1 billion US. That is 100 crore US dollars. You can convert it into Indian currency at the current market, and you can find out the valuation that Madam holds for his company. Welcome to the session, Dina Jacob.
Thank you, sir.
It is a pleasure to welcome all senior executives and other bankers, professionals from the financial space, consultants, fintechs, faculty of SIBSTC, my partner, Mr. Sundar Raman, and our administrative executives to this webinar. Welcome all. We seek your support to reach out more bankers. Thank you. May I request Princey to introduce the keynote speakers.
Thank you, sir. Good evening, everybody. It is a pleasure for me to introduce our keynote speakers for today, Mr. Soni A, General Manager and Head, Digital and Technology Department, South Indian Bank, and Ms. Dina Jacob, CFO and co-founder, Open Financial Technologies Private Limited. Mr. Soni has a career spanning 30 years, working both in public and private sectors. Of this, he has spent the last 2.5 decades taking South Indian Bank to a leadership role in banking technology and digital capability. Sir leads a team that focuses on enriching customer experiences at all touch points. He has led the marketing of technology and para-banking products in his role as head in the marketing department. He plays the role of a technology evangelist, popularizing technology products to staff and customers alike. We welcome you, sir. We also have with us.
Thank you very much.
Thank you, sir. We also have with us today Ms. Dina Jacob, who is a co-founder and CFO of Open Financial, a fintech startup offering neo-banking services for SMEs and startups. Ma'am has an experience spanning over 18 years building and establishing finance teams from scratch for early stage startups. She has led teams across a broad range of functional areas like credit and marketing, investment research, business finance and analytics, etc. She anchors the financial function of Open, and she also won the Best CFO Startup from BW CFO in August 2021. It's a pleasure to have both of you with us, sir and ma'am. Thank you.
Thank you.
May I request Mr. Soni, sir, to deliver the keynote address.
Thank you, Rao sir. Thank you, Ajayan sir, and for those wonderful words of introducing me to this August gathering. It's indeed a privilege for me to be a part of SIBSTC's Golden Jubilee celebration and this webinar that is being conducted immediately after the celebration. And the topic is also quite contemporary. The fact that there is a lot of talk that is happening in the world about digital disruption in various sectors. There is this sort of eternal question mark on whether banking has also seen that digital disruption. So when we started off, I remember we were seeing all the different sectors like travel, hospitality, everything getting disrupted by this new model where there is this intermediary who comes in. We call it as startup or tech companies or whatever, with absolutely no inventory, but creating a great technology platform to allow a demand and supply to be met in a very seamless manner, giving every stakeholder a wonderful experience all throughout, which ultimately became a huge disruption for those respective segments, with traditional players losing out big time. And I'm talking about Ubers, I'm talking about Airbnb, Netflix, across the board, wherever we have seen these big models coming up, it has impacted the traditional sectors in a large manner. Some of them managed to survive, some of them have been completely wiped out. So a few years back, when we were having internal discussions in the bank about the strategies that we need to, kind of gear up, we were planning to set up a digital vertical of our own. At that point, we were discussing about who are the kind of competition that we should be wary of. And in way back 4-5 years back, we were talking about our own banks, other banks, large, big, small, whatever. Uh, and then we started seeing this new regulation that came in, which allowed the payment banks and the small finance banks to come in. And all of a sudden, you had a bank like Airtel, which started off with a subscriber base of almost 250 million, which was at that point, before the SBI merger, larger than that of SBI. So there was a huge, excitement and a little bit of apprehension in terms of what might happen to the traditional banks with this kind of disruption happening. So that was a telco that was coming in. Then we had the fintechs come in the form of Paytm and others, who actually started off with mobile top-ups. Then they started becoming wallet players, and slowly they moved on and entered the regulated space by becoming a payment bank. And then, just as we thought that that was probably the last of the competition, we were hit by this big, hugely successful model in the payment space, where we were not only competing with fintechs, but we started competing with the big techs. And I'm talking about the GAFA, the Google, Amazon, Facebook and Apple of the world, because they were slowly getting into the payment space. And the fact today that in UPI, which is the flagship payment product of India, almost a significant share of the entire payment, 90+% is held by some of these big tech, is an indication of where we are headed. So net, I think the banks have realized that there is significant amount of competition that is coming in from the non-traditional space, and that they need to be geared up to face this competition. So if you look at the backdrop in which all of this is happening, we have around 115 crore mobile subscribers. We have 134 crore Aadhaar being issued. Around 69 crore Indians have access to internet. The total digitally payment active users in India is around 35 crore. And these are very significant numbers. I mean, for a large country like ours, to have this level of digital penetration at the grassroots is the kind of backdrop that is fostering this huge digital boost that is happening in the banking space. If you look at the demographics of India, I mean, almost more than 50% of India, the average age is less than 25. And if you increase that age to 35, that's more than 65%, which means what we are catering to as institutions is no longer the older segments of the society, but to the Gen Z and the millennials of the country. So therefore, the customer base has changed. The digital strength is, much better. And that is why, this whole sector is poised for a big change. And one of the railroads on which this is happening is what we typically, all of us know in different names as the India stack, where there are, multiple, almost 4 layers, where you have a presence-less layer, where we are talking about Aadhaar being, completely doing away with the need for you to be present when you are onboarding to a financial transaction. You have the paperless layer, which again is the e-sign, the digital lockers and all of that is also coming in. Again, Aadhaar eKYC is actually also acting as a great intermediary there. The cashless layer, which was the third pillar, which again is a hugely successful primarily because of UPI, but then let's not forget that there are umpteen other payment options in India, starting with FASTag, Bharat Bill Payment, NACH, all of them have done away with the real need for having paper and cash. So that is the next layer that is coming in. And now we are poised at the last stage where we are talking about the consent layer. And from payments, slowly, we are starting to see more and more use cases emerge, which is on the credit side, on the investment side, on the commerce side, with things like GSTN, ONDC coming in, OKIN, which is the Open Credit Enabled Network, which is yet another railroad, account aggregator coming in. All of this is basically going to drive the consent-based approach, where the consumer is now going to decide, as Rao sir was mentioning initially, the most important aspect of data. So who should get access to data? My data, which is important, which is proprietary to me, even though it is held by custodians, who gets access to that? So this is the backdrop in which we are, operating, all of us. So there's very high mobility. The cost has come down dramatically. Connectivity is very, very good with 5G also down around the corner. It is only going to improve to a very, very different level. Customer experience on the ground has been very good. And this is where some of the, the fintech communities have really, really made a big difference. They've not only, upped the scale in terms of how, you should be viewing the customer journeys. In some cases, they have overtaken the banks themselves. The regulator in India, RBI, has been a fantastic, medium, whereby they have not only been, very supportive in the form of regulatory sandboxes, in the form of innovation hubs, but they've also been very careful to, sort of ring fence the kind of exuberance that might come in some cases when, we start innovation. I remember the governor himself saying that when you are actually on the road, you have to obey the traffic signals. This is what the governor was, delivering in his keynote lecture to the fintech community a few weeks back. So it has been a very balanced approach. They have not compromised, growth. They have allowed for growth. They have allowed for partnership, but at the same time, they also want the whole ecosystem to be customer focused, not to allow any frauds to happen, not to allow any systemic risk to happen. And that is why we strongly believe that unlike some of the other sectors where the disruption has really been cannibalizing on whatever was existing, in the banking segment, it is more seen as a collaboration. Now, in India, the story is slightly different. Dina would probably agree because she represents the FinTech Open, is actually pitching as a neobank. In India, neobanks as such, which is a pure play digital banks, have not been allowed. Whereas in the UK and European countries, following the PSD2 guidelines, most of them were allowed to actually function. In fact, it was more of a regulator who were pushing them, and therefore these neobanks came up in a big way. In India, we do have these fintech players acting as a neobank, even though it is not under a sort of license regime, but almost providing that extra value add to the customer beyond what a traditional bank can provide within the regulatory means. In India, the fintech story is going great. We have almost 22 of India's unicorn, which I believe is a fintech out of the 100 odd unicorns that are there in the market. And the soonicorns, the ones who are actually going to become unicorns very soon, out of that also, it is the fintech community which is expected to actually be the largest segment out of the startups. We have around 4,200 odd fintechs. So obviously not all of them have succeeded, but many of them have partnered with banks and collaborated with banks or collaborated with NBFCs to actually create value for the customer and for themselves. I think almost $40 billion have been raised till now in this segment. And the market opportunity for fintech is also extremely good. Almost 1.4 to 1.5 trillion is what is expected by around 2025. Out of the fintech partnerships that is going good now, lending tech is actually going to become a big deal, followed by insurtech and payments. Payments, of course, has been a very good story till now. And if you really look at what are the factors which probably needs that fintech partnership, if you look at things like credit card penetration, it's only close to 5%. Insurance penetration is only around 4%. So all of this is an indication of the opportunity that is available for a bank to actually partner with somebody like a fintech in this segment so that we can reach that last mile very easily. On the payment space, I already mentioned the UPI front, 6 billion transactions. We are looking at 1 billion every month. That's what the CEO of NPCI, Mr. Dilip Asbe, is targeting, and has requested all the banks to gear up to process these kind of transactions. So if you look at the kind of models that have been successful in the market, the collaboration models between bank and fintech, customer onboarding definitely is a very important area where this is actually it's a very proven model where the experience of onboarding the customer through an app or a web is actually made much easier, and it is mostly integrated also to certain other value-added services that the fintechs are providing. So there's no need for a separate journey for that. It is actually becoming embedded inside the value added layer that is provided by the fintech. And this has actually helped companies like Open and other neobanks, fintech companies to offer, CASA based onboarding in a big manner. And there is a revenue to be shared with the fintech for onboarding and for the deepening the relationship as we go forward. Payment, especially on the merchant side, merchant acquisition side, there has been some fantastic journeys which has actually helped the POS, penetration in India to go to these levels. If you remember, just before Demon, the numbers were so small. Today, it has almost doubled and tripled in terms of the number of acquiring infrastructure that is available. And in that space, the fintechs have actually played a very, very important role. The latest kid on the block is the digital lending, which has been around for a few years in the form of credit card partnerships that fintechs has been having with NBFCs and banks. Some of them being pure play digital lending, some of them being hybrid model, etc. And then we also have the cases of co-lending, where using FLDG arrangements, etc., some of these fintechs enter into a partnership with the bank, or banks enter into a partnership with NBFCs who also happen to have a fintech arm, which actually makes the whole process much, much easier. On the investment side, we are now slowly seeing more and more companies partner with fintechs in terms of offering good wealth management products, mutual fund products and mutual fund platforms, so to say. And InsurTech, as I mentioned, is also something that is expected to come up in a big way in the country very soon. So if you ask me, my personal take is that the digital lending would definitely be the place where everybody is eyeing the maximum opportunity. And that is one of the reasons why, as all of us know, the regulator, RBI, has also come up with some very, very clear guidelines in terms of how the game should be played. Coming on to the RBI guideline part, as I mentioned, regulators sometimes, generally the grouse is that they don't foster innovation. They mostly, the guidelines are very prescriptive, and it doesn't allow people to innovate. But I don't think that is true. RBI as a regulator has been very, very clear, very proactive, very supportive of all journeys. But it's impossible for a fintech to, for a regulator to be constantly responding to all the innovations that are happening. As and when a particular form of innovation reaches a level where the regulator strongly feels that it is now time to intervene, to bring in a little bit of sanity in terms of whether these are actually happening as per the norms, or is there flouting of norms happening? Is there customers who are actually being abused? All of that comes into play, and that's why if you see in the last 1 year, there has been a lot of regulatory guidelines that has come in on the digital lending front. One of them being that a prepaid card cannot be used as a sort of medium for extending digital lending. Co-branding of credit card was another area where RBI came up very, very heavily in terms of what can be done and what cannot be done. A very important piece being data of a bank's customer cannot be shared with a partner who is running the credit card program. This is a significant change, because some of the earlier models were allowing that. So their banks had to devise different mechanisms. The RBI's view is that data is of prime importance, especially with the privacy data bill that almost was getting finalized. I'm presuming probably in the next year we might see the last version of it. With all of this coming in, this is going to be a very, very important part. Digital lending, as all of us know, in the last few months, it has created a lot of discussions in the country. And there again, RBI is very, very clear. They are talking about transparency, about governance. They're talking about putting everything out there to the customer so that it takes a well-informed decision. They have clearly ruled out the role of an intermediary getting in, becoming a part of the transaction. In fact, the entire disbursements and collections have to happen directly in the bank account, not through an escrow or an intermediary account. So these are all areas where they sensed that there were, problems that were happening, and therefore we had to, change. So that is yet another guideline that has come in. On neobanks, in a very informal manner also, it has been made very clear that that is not the model that they are looking at, but At the same time, let us not forget that RBI also permitted digital banking units in the country, which banks like mine also have started, which is actually an extension of a bank branch, but in a pure play digital mode, where in fact they went to the extent of saying that if the bank wants, they can actually treat it as a separate model by completely rehauling their tech infrastructure and replacing it with a good fintech. RBI's Innovation Hub has been a very positive experiment. We all have tried out different projects with them, blockchain, artificial intelligence. They have sandboxes where they run cohorts for every regular intervals for every theme, and they award the best fintechs, and then the banks are allowed to participate in that journey. Uh, the entire KYC, if you remember, with Aadhaar coming in, we had some very good modes of OTP based, fingerprint based, etc., which was topped up with the video KYC, which actually is becoming a big success story in many banks, including mine. UPI is another project which is now going global, which is going to enable the cross-border remittances also. If you remember in RBS Vision 2025, actually this is one of the pillars that has been cited in their strategy, that payment should become cross-border and payment digital transactions should become cross-border. CBDC is another area which they are looking at, and that's another area which all of us know is going to start very soon. Wholesale banking, I mean wholesale CBDC is what initially is being planned, which probably might come up later with retail. There again, banks will be able to participate, and I'm sure fintechs also will get an opportunity very soon. Account aggregator is a fantastic that model, which I personally believe is akin to what UPI did to transactions. Here, what we are saying is the customer has the full right to share the data using his consent for the entire life cycle to a financial information user through a financial information provider, which is basically a bank to start with, but all the insurance and other segments like regulated entities like SEBI is also expected to give permission to their players to come in. So what we are going to now see is, rather than rely on surrogate sources for customers' data, we are going to get direct access to the customer data as he wishes. And based on that, all the underwriting and other processes that of course, there is one option of aggregating information and doing value adds like personal financial, analysis and all of that. But more importantly, even on things like underwriting, we are going to see the right data, the accurate data come in based on which important decisions can be made. ONDC is something which has been piloted, and Bangalore being the place where it's going good. And then, of course, the other sources like GST, threats, and all of them are digital platforms, which is promoted by the regulator. If you look at what are the challenges in this segment, there are a lot of them. I mean, and I see these challenges as opportunities. For all the good work that all of us have been doing, the financial literacy among Indian, especially rural folks, needs a lot of improvement, and that's where fintechs and banks can partner. Cashless economy, even though the digital story has been excellent, the fact remains that cash is almost at the same levels. So we need to bring that down. The banking typically today relies heavily on collateral. Can we serve customers who probably don't fit that kind of collateral base, and even people who are new to credit, because that's also another area where today for bureaus, etc., we do have source of credit information, but for the folks who are new to credit, probably we need to devise suitable means. uh, the cost involved in transactions, in banking transactions, are still high, and that's yet another area where RBI wants to bring in parity and bring in optimal solutions. And the penetration of insurance, penetration of banking, all of them are still low, which is something that we can definitely improve. There is yet another area where the customer journeys, for all the good work that we have done, still today there is a lot of worry around broken journeys. And by broken journeys, what I mean is, when a customer is doing a transaction, when everything goes fine, it's all seen as positive. But the moment the journey gets broken, do we have a very proactive system where the customer is refunded almost real time, he gets to know what is happening, and so on and so forth. And what are the other important area being the challenges on the cybersecurity front, on the fraud front? How can we enable our customers to actually be protected? Are we doing enough? if you ask me, we need to do a lot more. And that's where, again, a bank and a fintech can partner and produce great results. The benefits of this kind of a collaboration, in my view, for banks, the biggest benefit is that the last mile problem can be solved if the fintech is coming in with a model of aggregation, where they have feet on street, either directly or with partner with some other players, so that the cost that a bank typically has to serve the last mile, probably compared to a fintech, would be much, much higher. And that's where the partnership can be of help. The ability to offer better customer experience, as I was mentioning, fintechs are in a position to be very nimble, don't have the legacy of technology which many banks probably have invested over a period of time. And that's where, when you can offer a layer which is far better than what you could otherwise offer, that would be a great proposition. The ability to scale up the customer base rapidly is also something that banks are today looking at. So we are not seeing fintech only as a technology company. We are seeing them as partners in ramping up the customer base and our businesses on the balance sheet rapidly. The other important thing that we have seen is the quick time to market. Many of the fintech projects that we work on, the ability to roll out the product to the market is extremely fast, compared to banks doing all of it on its own, because you don't need to reinvent the wheel when somebody has actually come out with a product which has got a great value proposition, where you can actually hit the market very fast. Now, for the fintech side of it, obviously, there is a benefit of the experience of bankers, especially with the kind of regulatory handholding and support that they get when they deal with the bank. They can also leverage through the banks, because as I was mentioning earlier, things like Aadhaar, KYC, or account aggregator, all of them today the regulator has permitted to come through the bank. And that's where the fintech partnership with the bank can actually help them to scale up. In our bank, just before I conclude, I'd just like to round up with what we have done at our end, so that a little bit of personal experience can also be shared. We had a 4 dimensions. We call it as 4Ds of digital banking. With we call it internally as indulge, nudge, purge, and forge. Indulge is where we do every initiative to give great self-service to the customers who are capable of doing digital transactions on their own. Nudge is to provide or empower our branches and our partners with digital, so that the customers can come to digital journeys very fast. Purge is to purge all the wasteful process and automate as much as possible. And forge is the last one, where we plan to have a lot of relations with the fintech. So in all these segments, we strongly believe that fintechs can act as a great partner. Our personal success stories on the fintech side has been very good. I'm very glad to share that the most latest one that we had started is also the latest entrant to the Unicorn Club. I'm talking about the brand One Card, which we were one of the earliest one to partner. And within a matter of 3 to 4 months, we were actually able to roll out the product. And today we have almost close to 150,000 cards in the market. Our cards and with the brand has actually been ranked as the top one in terms of number of spends in a month, volume in a month, and so on and so forth. So what I'm trying to say is that these are the good success stories that I've seen in my bank. We have tied up with companies like Active to do GST-based loan underwriting. On the supply chain finance, which is again another segment where we thought on our own we might find it very difficult, we tied up with a fintech called Viana, where we are doing very good business. We have come up with our own e-commerce marketplace with a tie-up with a fintech, so that arbitration can be offered to the customer. And then on the other side, we not only deal with fintechs, we also do deal with tech fins. The technology companies who are very good, they may not have a business model, but they white label the technology platform, and we can actually work on top of that. Now, just before I conclude, what are the drivers for a successful partnership? In my humble view, for a bank, I'm sure Dina would explain from the fintech point. From a bank, I think the culture of fintech adoption, right from top to bottom, is very important, because we all bear we are all creatures of habit. And whenever we see new things coming up, whenever we see youngsters just out of college pitching a new idea, there is a general tendency to scorn and feel that, oh, this is not going to work. So the culture that out of the 10 that come in, maybe 2 or 3 would work, that should be there right from top to bottom. We should also have a view of balancing risk and growth. we should be able to work well within the regulatory ambit so that whatever you do should not be, seen as sort of, should not be seen on the wrong side of regulator. Most importantly, the ability and the nimbleness, the agility in ideation and execution, that is very, very important, which, because with the fintech, it is, you can't take them on a 6-month project, which typically banks do with technology and all of that. You have to make quick decisions, yes or no, and move forward. And in our bank, what we have done is we have had cross-functional project teams. So because typically what happens is if you take an idea, and unless you have a group of people who work on that from day 0 to day 90, this would typically be seen as yet another project. So we have to have that kind of a cross-functional metrics team structure, and with the buy-in from top management is also very important. Right from the MD, right from the board, everybody should understand that there should be some provision, some funds provided for fintech partnership, and more than the fund, I think the buy-in in terms of decision making, the ability to take risks, and then take it to fruition. And lastly, the willingness to experiment is also something which is very, very important, because as I said, some things may work, some things may not. In my bank, we generally discuss about, because normally it is seen as, is it only new things that we need to do in fintech or innovation? In my view, that is not the case. We generally discuss a lot of frameworks. I'm particularly interested in a model of called Dublin model, where they are talking about 3 different areas: configuration, offering, and experience, as the 3 major areas in which everybody can innovate. So banks also are innovating on their own, not just through the fintechs. There are things where process improvements are becoming very, very rapid. Structures are getting changed. Products are getting changed. Channels and the network connections are getting changed. Brand is getting changed. Service levels are getting changed. So all of these are areas where innovation can be attempted. And I'm seeing that in the next few years, this model is going to be hugely successful in India. And it's not a question of compete. It will be collaboration between banks and fintechs. Thank you very much.
Thank you very much for the very, very valuable presentation, Mr. Soni. And we will have interactions after Jacob makes her presentation. Now, let's hear from the side of the fintech startup and the unicorn, Open Financial Technologies, the CFO and co-founder, Dana Jacob. Over to Dana, please.
Thank you, sir, and thanks for having me on this panel. Soni sir, that was an amazing presentation, and I don't know what else I would add. You have covered from both the sides, and it has been enlightening for me also. Thank you for that. And good evening to everyone. So from a startup side, I would, I don't know how much to add, but from a startup side, I will talk to you about, I can't agree more with Soni sir in terms of, this is a collaborative ecosystem that we are building. So in the beginning, we heard about the 3 decades of the journey, right? The first decade of the starting in the 2000, where we had the digitization of the banks coming in, and then the second lap, which became the distribution, and the third part, which we are talking about, the revolution. That was a beautiful way of putting it from a journey perspective in terms of the 3rd decade that we are in right now. So if you look at it, all of this stems from the fact that in India also, particularly if you look at it, banking is entrusted with the key matter of protecting the consumers or the customers' money and the safety and security of the transaction, as well as in a terms of who is doing the transaction for what. So which is where the KYC or AML you talk about in different names. These are the 3 key areas in which we are looking at, or whether it is a regulator, whether it is about the banking system, whether it's about defining. If you go to the root of why all of this is defined, this is stemming from these 3 areas. And this is where, if you look at it, banking has been playing a key role. And that initially we started with the manual systems, we started with different frameworks and rules which are required to control this. And then came the digital disruption time, wherein, in terms of inclusion, so in the beginning, whatever rules we had actually prevented a lot of people from getting into the formal system, which is where we talk about the inclusion, all of that, because without having a lot of things in their hands, in terms of proving their identity, proving the credibility of the transaction, they couldn't come technically into the banking side. And then we saw the inflow of digitization, which made it much easier. But when you look at it, the initial infrastructure, the banking infrastructure from a digital perspective, it was extremely hard, or rather it went through a huge evolution. And that's where the second part of it, when digitization became very, very high in the ecosystem, and when we started getting, talking about the financial inclusion, that's where, if you look at it, the whole revolution of giving this to the end customers, getting this to more and more end customers, and the penetration started happening with the kind of the payments and lending. These are the two things, if you look at it from the maybe around 2012-13 onwards, we started seeing slowly this penetration of digitization happening. And then around 2015, when all the digital lending startups came up, that's when the whole fintech got slightly defined in the ecosystem. And then what we saw in the last 3 years, I would say it has been an acceleration, accelerated by demonetization, accelerated by GST coming in, accelerated by the pandemic setting in. That's when we actually realized the need, or rather that was a trigger point for not a good to have feature in terms of digital adoption, but a must have. And this is the point wherein the entire journey started getting accelerated in terms of how does the customer interact very, very seamlessly with the banking ecosystem. And this was the result wherein, from the three areas which I mentioned, whether it's about knowing the customer, whether it's about interacting and participating in the transaction, or whether it's about moving the money, or whether it is about protecting the data and whom to give or whom not to give, particularly when it comes to once you do all the transactions, ultimately it's about whether you have a surplus and how do you optimize that money, which is where the wealth comes into picture. Or if you have a shortage to take care of any of your transactions, do you have a lender who is there to back you up? So these are the two areas, or rather it's a broad spectrum, if you look at it, where the banking functions. And each of these required, if it were in the digital era, some sort of innovation and customer ease. Because customer had to understand, had to be simplified and told in his language how he has to interact with the system. And this is where, if you look at it, last 3 to 4 years, you have seen multiple startups, both in the infrastructure enabler, or whether it is in terms of the understanding the KYC and the digital journey in terms of getting into the banking transactions, opening of accounts, right from opening of accounts and getting into the banking transaction, all the way to who sees the data, who can use the data for what purpose, which became a very big problem once it started getting spread out into multiple areas when fintechs came into picture. So this is how the whole journey of this collaboration started. And as Sunisa rightly mentioned, it was about the mindset. Initially, when these two entities interacted, there were a lot of apprehensions, I would say, apprehensions in terms of whether this is going to work, whether this is going to be a competition. And ultimately, it has flown beautifully into a collaborative environment. And I would say that RBI or the regulator also had a key role to play in the whole evolving landscape that we see today. So whether it is in terms of the guidelines, whether it is in terms of opening up the sandboxes, classic example is, I think, we also went through the RBI's sandbox for cross-border payments, and we were, with the blessing of a central regulator, I think we were the first ones who could technically do something on the blockchain in the cross-border for that matter. So I would say that very progressive view from the central regulator. And every time you interact, you can also see that active participation or active way in which they are trying to make this association work properly. And the crux of it is that only if this association works properly, we can get the every part of India onto the digital journey as well as onto the banking part of it. So when I talk about, our own venture, why we started off again on the, whether it's, what is new banking, digital banking, we can have debates on all of that. And today, if you see, it is perceived in different ways at different points in time. But in simple terms, going forward, what has to be banking? Banking shouldn't be something which looks into your face separately, but it is an inevitable part of a day-to-day transaction that one is doing. So where is the confluence of transaction, which is a trigger point for your money movement, and the banking, which takes care of whether there is, you need money, you have to park your money for future use purposes, or the interaction, or in terms of, different ways of payment that you will be in a position to do for your transaction. So these are the areas of confluence which happens, and that's precisely what is going to happen as a trend going forward, which is again where, for example, when you look at digital lending, where the digital lending, the innovation, the whole innovation is coming from two areas. One, embedding that at the point where the transaction happens, and second, whether it is in whichever form factor. That's whether it is a bank transfer, or whether it is a buy now pay later, or whether it's a card. It doesn't matter. The form factor doesn't matter, but have it embedded at the time of a transaction. Second, are we looking at the 360-degree data of the same customer you are underwriting, and can you underwrite them dynamically? So this is the strength, how it comes in terms of not only looking at the historical data, but in terms of the dynamic data which is flowing from the customer. And this is exactly where, when innovation happened, even the regulated entities, everybody, when they watched the way in which the innovation was panning out, we realized that the data was misused in some corner. Data was getting, filtered into, or rather getting into different places which shouldn't have been. And then there were places wherein, the safety, security, fraud, or in terms of even from a national security perspective, things were happening. So these are the areas where we have seen the regulator watching very closely what's going on, what changes we have made to the banking ecosystem, and what tightening needs to be done. Yet at the same time, I would say that our regulator has been extremely successful in terms of finding that fine balance and promoting innovation, yet at the same time, the collaboration. So this is one area where, we should keep our eyes and ears open in terms of regulated entities would remain. I mean, especially if the fintech also tries to get into the regulation and starts looking at all the things which has to be done from a regulatory perspective, which protects the customer, innovation could get slightly derailed. So this is a time wherein we have to play on each other's strengths. So if you look at the ecosystem, the regulated entity, as well as a fintech, or rather somebody who should be innovating from a technology perspective, doing customer backward innovation is extremely critical, three pillars of the whole ecosystem that we are building. And this is definitely not a winner take all market in terms of, the payments or this large handling an economy. If that be the case, we would have only seen a few banks existing in the country for so many years, right? And going forward, this is whether it is only one fintech and a bank which is going to collaborate, or bank is going to innovate completely and do it under their umbrella. So the answer would be that, or rather, of course, 10 years later, we might have different models which are evolving, but at least in the next decade, it's going to be an extremely collaborative way in which things have to be seen. If we were to see a huge revolution in terms of the length and breadth of the country, and in terms of the global transactions as well, getting more and more into the digitized era, and more financial inclusion happening. So this is, from a perspective of the fintechs, again, what we are extremely mindful of is we should never step onto anybody else's shoes in terms of what needs to be done. The boundary should be very clear. Where we innovate, what we do for. That's from the customer backwards. For the customer, how do you ensure we talk their language? Or rather, this is exactly where, when we talk about the APIs also, we talk about, if you speak only in the technology terms, it's not the end customer is going to understand. And that's where it gets translated into how the connector can effectively translate and tell in the other person's language. And this is what the fintechs have to stand for, the distribution and penetration. And regulated entities, they will have to, as Sonia sir also rightly mentioned, innovation is inevitable, yet at the same time, eyes and ears being open to what are the new things which are coming up. Each area would have in such depth which needs to be changed and evolved. And that is where, fintechs will be looking at each of these areas. I would say that a lot of unbundling now is happening in the banking ecosystem, and the rebundling would be more of an innovative side from a customer's perspective, customer experience perspective, and that too from a very embedded side. So it's going to, the embedded finance, embedded banking is going to lead the way the next decade. And that's where it's going to be, it's extremely important that the three pillars work together, and we have collect more and more people into the ecosystem, right? From the customer to different segments to the way in which, you know, the fintechs and the regulated entities are working together alongside and respecting completely what the regulator is coming up with, because there are so many things which we don't see in bites, which they see in totality and coming up with the regulations. Our job is to tell them, give constructive feedback, understand from them where the logic is, and which is where I've seen from RBI's perspective also, how open and how open they are to feedback, and the different initiatives they're doing also in terms of understanding what is a pulse, what is a requirement, and then working backwards on how we can have the regulation changed in such a manner, keeping in mind the interest of the customer as well as the interest of what they are trying to do, and then in terms of encouraging innovation. So in a way, I would say that it's very exciting times for fintech and even the banks to collaborate and take this revolution to the next level, and getting every transaction in India and even in the globe being done digitally. And that's a dream I think we have to fulfill over in our lifetime itself, and probably in the next half a decade to the decade that we are in right now. And thank you for the patient hearing.
Thank you very much. Thank you very much, Dina, for a very valuable input from the startup point of view. Now we will have interaction. It will be open for interaction. The customers can, no, participants can unmute and ask question to Mr. Soni or to Dina Jacob. Before we start interaction, let me ask you, having been interacting with many startups and fintechs, how you have been working with lots of banks also. How do you find the journey? Is it smooth, the hierarchy, the technical capability of the hierarchy in the banking system and the knowledge levels? How do you find it, and how do you solve that? That's one thing. And second is there a difficulty in product integration or technology requirements? Any clarity issues are there? Some startups used to talk about that, and how you used to solve that?
So the question is to me, right?
Yeah.
Okay, thank you. So in fact, we started our journey in 2017. To be honest, when we had these initial conversations with the bank, right, there were two challenges we had. One was on the acceptance, or even looking at, you know, how this is going to pan out, that many banks couldn't take a view on. And the second problem was also, even if the banks were willing, the technology was a problem in terms of the infrastructure and opening up in terms of working with the fintechs. So when you talk about a broader solution that you wanted to look at. But in the last 2 to 3 years, every bank, if you look at it, that we have had interaction. Some of the banks who said we definitely don't look at working and we are going to build this in-house. We have seen them. I'm talking about the large banks. Today, we work with 15 banks in India, of the top banks in India. And there we have seen a huge change in the mindset. And last 2 years, they are ready with the infrastructure, I would say, to a very good extent, and not all of them equally, but to a good extent. And second, the biggest change is the mindset change also.
Okay.
Wherein they have come to a stage wherein this is good to collaborate, because let's hold hand and we have a common target to look at, a common goal to look at. How do we solve for that? So this is one thing we have seen changing with the banks. So that experience, that being said, from an integration perspective, I would say that even now, it's not a completely a smooth journey, which also encouraged us to have this third division, which is called Switch, which is into embedded finance. And then we also have a banking as a service division. So which is where we help, again, non-fintechs and other companies who can just, seamlessly have a plug and play part wherein, this whole embedded portion of the transaction or the program can be put into their own workflows. So these are the two things I would say, what also stemmed from some of the challenges we have faced. Yet at the same time, this is equally an opportunity too.
Thank you very much, sir. Participants, Rao sir, open for interaction. Hello. Can you unmute and talk? Nishant, you're
Sir,
not
good
audible.
evening.
Yeah, please. Please. Can you unmute and speak?
Yes. So am I audible now?
Yeah, please. Very much.
Yeah. Yeah. So I'm Nishant. I'm based at Chandigarh. I have a question for Mr. Soni. I wanted to, basically understand, sir, you mentioned about low penetration in spite of the banks using technology. And also you mentioned about the bank's ability to, cope up. So I have a question for the older generation as customers to the most of the PSU banks. So 10 years from now, or probably at the present moment, are banks doing, sufficient amount of initiatives are being taken to, educate and make the older generation aware about using the technology for banking, so that, we can actually help them also, come up the scale. And because I believe the younger generation is banking more with the private sector banks than the PSUs. And the idea is 10 years from now, 15 years from now, we must take these older generation, people as clients along with us and make them use technology. So just wanted to have your views on this. What are we actually doing on? And if you can just throw some light on this.
Yeah, thanks, Nishanda. Wonderful question, because if you remember in my talk, I was actually mentioning about the 4 dimensions that as a bank we follow. We are in a unique position where even though we are a private sector bank, we have a legacy of almost 90 years. So we pretty much understand the kind of customer profile, the experiences and the challenges that public sector banks encounter. So when we devised this 4D of digital banking, it was very clear that, as I was mentioning about indulge being for those who are able and who have the digital savviness to do everything on their own. The millennials, as you rightly pointed out, have been born in a phone era, in a mobile era, and there's no need to teach anything to anyone. Whereas the second group of customers whom we actively believe are very important for us, to them we have this nudge strategy. And by nudge, actually it's not something that we have coined ourselves. We have picked this up. It's a Nobel Prize winning by Richard Taylor, where we are talking about how can you make digital the first option, the default option to a customer or to a person who otherwise is not willing to accept that kind of model. So one of the examples is somebody who walks into a physical branch to maybe take a passbook print. Now, how do I actually nudge him to go to mobile? If I directly take him to mobile, many of them might feel that, look, I mean, I don't want this. So the way we are doing it, we first do, obviously, we all of us have passbook printing machines and all of that. From there, we have now migrated to passbook kiosks, where there is a small assisted mode where someone just walks him up to the kiosk, shows him how he can do it. Within the third or fourth time that he does that, we know that we have an opportunity to tell him that, sir, you don't need to come here, we can actually help you with downloading the app. Now, with downloading the app, the biggest fear that senior citizens have is fear of losing money, fear of the frauds that everybody is
Yes,
aware
sir.
about. And the fact of the matter is that it is not the millennials who are losing money. It's mostly the senior citizens and mostly the folks who are not digital who end up losing money because they are not a part of the digital ecosystem, and because they prefer to keep out, or if at all they are a part of the digital ecosystem, they don't actively indulge. So for example, they may use an ATM card once in 3 months or 6 months. How do you actually get them to an app where they can actually do these transactions? And one thing, since you asked, I can actually explain. In my own bank, we have a concept in the app called e-lock. It's a very
Yes, sir.
simple thing. It's a universal lock for all digital debits. Now you can have different variants. Some banks offer card. Now RBI has also come up with card blocking and all of that. But here, what we are talking is a simple on-off toggle switch in your mobile app, which allows you to literally shut off all forms of digital debits, be it ATM, be it internet banking, UPI, or anything, AEPS.
Right.
Everything can get blocked if you don't want. If you want to do a digital transaction, you have to log into the mobile app. So as long as you have the app with you, as long as you know the pin, you are safe in that sense. This has been a very good eye opener, because slowly when we explain to them, literally, you don't need to be worried about that SMS message that you see in the morning when somebody says 1 lakh rupees gone
Right.
from your account. Somebody has done a transaction at 3 a.m. or 4 a.m. So these are the nut strategies that we follow, Nishant. And I'm sure many banks in the country is adopting to these strategies, because we strongly believe that indulge is not the only way bank is going to do business. Only difference being, we would love to see a period where branches don't do any transactions. Instead, they indulge in, they spend their time in support, in service, and in sales. That's the idea that of the ideal branch that you may see in the future.
Sure, sir. Thank you so much. Thank you so much, sir.
Thank you, sir. Any more?
Yeah, hi, good evening. This is Krishnadas here from Kozhikode. Thanks a lot for that wonderful way of presenting from the side of Mr. Soni and Ms. Deena also. On the one side, Ms. Deena has a dream of converting every single transaction into the digital mode. And on the other side, Mr. Soni explained the reality where we have 35 crores of people doing digital transactions. Yeah, it was beautifully explained that collaboration alone can take this forward. And the way, means with which one from the side of the bank, from the side of the management, from the side of the employees, that's going to be very critical in achieving this goal as early as possible. The security feeling, the safety, security, and protective feeling that the customer has to get on using these platforms, that is most important. And the way in which we can nudge customers to get to that level, that is also equally important as far as the bank is concerned, wherever there is a collaborative effort. So I think it is not just nudging customers, it will be a question of nudging the staff at the branch level or the root level, grassroots level, to nudge customers to get this done. So I think that preparation also has to be made from the bank's point of view. Thank you. It was a wonderful experience. Thank you both, Mr. Soni as well as Deena. Thank you.
Thank you, Krishnadas sir, who is GM of IDBI Bank. Thank you for your valuable inputs. Somebody has raised the hand. I can see the name, only the number was seen. Can you unmute and talk, please? Okay.
Hello.
Yeah, please.
Yes, sir. Can you hear me?
Yeah, please make it.
Yes, sir. Good evening, everybody. Myself, Sagar. I have a quick suggestion for most of the tech consumption that digital banking is taking place in this era. I have found that the digital banking procedure where we register customers and every other customers in the process of making them digital, it is very complicated for most of the people. Even senior citizens and young generation, everybody is facing challenges during the process. So my suggestion was that if we can segregate the portions of the digital banking, like 0 to 30, 30 to 45, and 45 to 60, based on their age and understanding of the mobile digital banking, we can give them ease of banking like that. Means for a younger generation who can understand and do every digital transactions like that on his own, may be considered in the 30 bracket. And the generation which are facing difficulties in digitally understanding everything, so we can somehow ease their complications by providing minimal facilities in that. So this is I think should be the focus we're targeting the customers to make them digital. Even if a person who is 60, he can understand and easily transact digitally and onboard them in the banking system. So this was just a small point I would want to raise. These are used in most of the mobile phones as well. So why not we could implicate and inculcate them in the digital system. That's all. Thank you, sir.
Thank you, sir. Rao, sir, is it okay? Can we?
Hello, sir.
Rao, yeah, who is speaking? May I know who is speaking?
Yeah,
Yeah.
Myself Ganesh. Good evening to one and all. Myself Ganesh from City Union Bank. I need to know about the credit risk mitigations in digital lending, sir, because how the recovery will be taken and how the regulator will help in it for the banks and fintechs.
Sorry, was the question to me?
Yes, sir.
Yes,
Yes, sir. It's for Sony, sir.
Yeah. Yeah, so see, digital lending, basically from the RBI point of view, they have come out with a guideline where they are talking about 2 or 3 major segments. One of them being the customer protection and conduct, etc. Where they are I mentioned that the loan disbursements, servicing, and repayment should happen directly through a bank account. That's been one of the big ones. Second important thing that came in that particular circular was collection of charges. Who should be collecting the charge? Till now, there was a practice where, as Dina was also hinting, a lot of apps were actually ending up collecting charges, usurious fees, etc., from the customers directly. Now that is supposed to be stopped from November 30th. Nobody can take, no intermediary can take money from the customer. Instead, the banks have to actually share the cost to the partner, the fintech partner, and they can probably end up giving a levy, charging the customer. Third thing was on the disclosure to the borrower. You know, I'm sure you would have heard about things like key fact statement, annualized percentage of return. All of this has been brought in to tell the customer that this is what you're going to enter into on a yearly basis. These are the kind of fees and charges and interest that you're going to pay to whoever is coming in. Then there is another segment on digitally signed documents. They are saying that the entire process has to be done digitally, and it should culminate in a digitally signed document going back to the customer, where everything is included, including the most important terms and conditions and so on and so forth. Every input about the digital lending apps and the loan service providers that a bank gets with bank as an arrangement should be made available on the website, along with the grievance officers, grievance redressal, etc. Nodal officers of both fintech and the bank should be very clearly mentioned so that they can the customer can escalate. The underwriting of digital lending, that is also something that was going into a very, very interesting dimension. Social parameters are being used today, as Dina was mentioned, BNPL, etc., where you don't really have a trusted source, but you are looking at newer sources. All that RBI has said is that it should be auditable. It can't be that you come back and say that we don't know how we have underwritten this after 1 or 2 years. There should be a cooling period that should be given to the customers before they can actually come back and say that I don't need this loan, I can pre-close, and I need to only pay the pro rata amount without any pre-closure charges. On the tech and data side also, there are a lot of guidelines that RBI has brought in. There should be explicit consent, audit trails. So all of this is pointing to the fact, and then you can't, I'm sure you would have seen apps which are getting access to your SMS, to your calls, etc. RBI has very clearly said no. They have strictly said no to any such practice. Basic details of the customer can be obtained, nothing beyond that. Storage of the data obviously has to be within India. With regard to collections, there is a lot of impetus that has been made on how the recovery will be made, who are the partners. All of this should come in the KFS when it actually goes out first to the customer. And if there is a change in the agency with whom you're doing it, you should be actually intimating the customer. And on the last part of your question on how technology comes, see, collections today, by and large, to a large extent, it's happening either through an NACH or through a PG kind of mode, where from the app itself, you can actually service your loan account, or a direct bank transfer using IMPS or UPI. So all of those modes are going to become more and more active, and that is what RBI also is looking at.
Thank you very much, sir. We have one more last question from Mr. Prakash, sir. Prakash, sir, you unmuted. Do you have anything? Rao, sir? Or anyone?
Yeah, I am Lakshmikant Srivastava from Lucknow.
Yeah, please.
So very nicely, Mr. Sony and Madam Dina has covered the entire this one fintech system, and very nicely he has also covered, Mr. Jack, that Mr. Sony, that RBI has made a cohorts, and the third cohort is the MSME cohort. And I wanted to know the success percentage in that cohort. And innovation, definitely our financial institutions must be in the sandbox. They may be doing the innovations, and they will come out with some good
lending system. As of now, what I find that MSME lending after 59 minutes, not much progress has taken place. And at present, what we need is data mining, data analysis, and data security. You have rightly said that the data should be stored within the country. That is very nice thing is that my concern is that data security is the number one thing. Data theft should not be there. And what is the progress for the retail lending and other MSME lending? Because we cannot go for that corporate lending in the digital form as of now. But substantially, our public sector banks should also move to the digital platform in collaboration, because competition era is over now. It is the era we have to survive with the collaboration only. So what's the success as of now in the lending front? Because first cohort retail payment, it's successful and it is being done. And we are, I think, number one country in the world in the digital transactions. So now, kindly throw some light on the progress in the lending side, Mr.
Sir, thank you very much for this very important valid question, especially in the MSME lending space. See, as far as the knowledge, what I observed or I known from the fintechs and banks, fintechs are playing a critical role, not only in collaborating with banks, they are also playing a very critical role in collaborating with MSMEs, making that journey smooth. And this has also started giving reducing the gap and the timely lending for MSMEs. Especially Open is playing very important role in that. Dina Jacob, can you just tell your experience? How was it do that? And after that, Sony, then we'll close this discussion, sir, please.
So, sir, in fact, today we work with almost close to 3 million SMEs all across India, and we also have started a lending side as well. So what we do is, if you look at it, the challenge today is, give or take, the 300 to 400 billion gap that we talk about in the digital MSME lending also, right? The key two issues are there. One, the MSMEs are not, most of them don't have a structured way in which data can be presented, so that they can come into the way in which, they can be properly underwritten or properly considered for a loan for that matter. So access to loan is limited by structured data, and second, again, from a cash economy. So these two things is what, from our perspective also, what we tried solving for is giving a platform which allows them, while they are doing transaction without understanding whether a debit or a credit, understanding all of that is not an SME's business at the end of the day. And how do they, while they transact, can have a structured way in which data can be presented, and a regulated entity who is also a lender, who should be in a position to access and see the data to identify whether this person can be actually be considered for a loan or not, whether it is from, this is where alternate data sources also, if you look at it. If you see what transactions they are doing, whether it is from a GST, whether it is from the banking transaction, whether it is from at the point in time where they are doing in terms of a supply chain. So there are, when you look at, when you are playing where transaction is happening, this is where you are able to get fetch the data and make an informed view about the customer, and that is from a dynamic perspective, not about what he has done in the past, currently what he is doing. So this is where MSMEs, and then again, the ease of access or usage also, whether again enabling them to have a proper access to a bank account, a proper current account, because usually if you look at it, most of them have a SB account, or it is a fragmented different ways in which, if you look at typical example like gold loan, most likely it could be taken for a sole prop, mostly for a business, putting it back into the business. So there are so many such overlays which are happening, or rather overlaps which are happening also. So this is where we find that MSMEs need help in terms of structuring coming into the formal economy, and then service they need. And that's where the collaboration also, for example, we have banks, NBFCs, the P2P lenders, all of them who are lending to different segments and different focus areas, who are the partners for us, and looking at which section this SME comes from, what is their requirement. We also structure and provide the data in such a manner that they are in a position to take an informed call provide them their loan. This helps in two ways. One, doing a very good risk-based pricing because you have more information. And second, in terms of assessing a limit, whether better limit because you see the 360-degree data. And third, in terms of even getting new to credit or a new to banking customer also, after looking at enriched data for some time, taking a call in terms of whether we can bring them into the fold of formal lending. So this is how creating, or rather pushing the boundaries with various of this data is going to be the critical thing going forward, and that's where MSMEs require help also. And that's where I'm sure in the sandbox also quite a few innovative models from how this can be, inclusion can be done in a good way, that's coming up.
Anything briefly, one or two things you have to point out, then we'll close this discussion, sir.
No, I think Dina has covered it well.
Very good.
She's right that the MSME journey has not been as aggressive as retail. Just to add a few points, already there, on the supply chain side, on the vendor finance, etc., there is a lot of SMEs who are getting a benefit. If you look at the year-on-year growth, 35% is what we have grown from the COVID days. So there's a good amount of growth, bank credit, that growth that is happening in the MSME sector, especially in the may not be in the micro segment, but more in terms of SME segment. New forms like receivable financing, etc., through POS terminals, etc., that is also happening, especially for trades. This is where I think the need for the fintech partnership becomes extremely important. GST is providing a great platform for giving sufficient data for the cash flow and all of that wherever a GST is possible. But wherever a GST is not possible, you can still have authentic data come in from your fintech partner who is providing something like an ERP service to these businesses, so that you know that you're looking at authentic data, authentic bills. And then of course new forms with blockchain and all of that coming up. There are some exciting sort of experiments also happening, which may take a little bit more time, but lot more to be done in that segment. Qualitative assessment is also something that is happening. We in our bank also have started qualitative assessment in addition to the quantitative models that are already there, building it into a data model, coming up with good scoring and so on and so forth. So I'm very, very positive that this sector will see a lot of change with the help of this technology and new forms of lending that is coming up.
Thank you, sir. Thank you very much. Rao, sir, it's already 9:20, sir. Can I?
Yeah. Yes, sir. We can close the session.
Yeah. Good
evening. Good evening. I'm Vishweshwar. I'm former General Manager, Syndicate Bank, and also former Senior Advisor, IBM Mumbai. Okay. I would like to thank Mr. Soni and Madam Jacob for a beautiful presentation, a very concise one, and with no exaggeration. And the positive steps taken by the RBI is really commendable. I would like to thank both of you, and also Mr. Rao for arranging this program. Thank you.
Thank you, sir.
Thank you very much. We have been receiving lots of positive responses in the chat box, and we had 51 participants in Zoom, and 45 participants were watching in YouTube channel. So that was good response to this, and it was a very good, interesting session. We will be sharing the video of this recording. We can share it with other bankers also. And thank you very much. Let me, Rao sir, can we close, sir?
Yeah, we can close. Thank you. Thank you, Mr. Soni. Thank you, Dina, for the wonderful presentation. Sincere thanks to all of you. Thank you.
Princey, can you just briefly conclude the session by the vote of thanks? Thank you very much.
Yes, sir. I deem it a great privilege to propose the vote of thanks. First of all, a heartfelt thanks to our keynote speakers for today, Mr. Soni and Ms. Dina Jacob. Thank you for making this discussion a resounding success. Feeling gratitude and not expressing it is like wrapping a present and not giving it. So our deepest sense of gratitude to KLSN Rao sir and Ajay sir for organizing these series of webinars. Thank you to all the participants on Zoom and all our viewers on YouTube. SIBSTC and VRDDHI CTS is committed to excellence, and we will continue to organize Banking Matters webinars for the benefit of the banking fraternity. Thank you, everybody. Thank you, everybody. Thank you, sir.
Thank you, sir.
Thank you, everybody.
Thank you very much.
Good night.
Thank you, sir.
Thank you very much. Thank you, Rina. Thank you, Soni sir. Thank you, Dina. Thank you, Rao sir. Thank you very much.
Good night. Good night.
Good night.
Thank you, Rahul. Thank you.